G'day guys, welcome to the channel. My name's Tim, and on today's episode, we're taking a constructive look at Bitcoin, and we're looking for evidence to see whether this correction that we've just had is just a correction or whether there is potential downside still to come. We're going to be looking at the previous bull run that we've just had, and we're going to be looking at these moving averages and how Bitcoin has interacted with them and what we can expect in the coming days and weeks. All right, let's get stuck in. So first of all, you will notice here, this is a daily Bitcoin chart. The red line is the 20-day moving average. The orange line is the 50 and the purple line is the 100. Okay. Now you can see that we've closed below the 20, quite obviously closed below. We even wicked past the 50, but we came back and closed just below the 20. Okay, now let's have a look back in the past. Whenever we've closed below the 20, like we did here, we've then seen further downside until we actually hit the 50 and close around the 50. Now, at this point here, we did a similar thing. We closed below the 20 and we had further downside, and we didn't actually get too close to the 50 on this occasion. But then at this point here, we closed below the 20 and we tested the 50 and we closed at that point. Again, right at the top here, we closed below the 20 and we tested the 50. So it is a fairly common scenario that when you close below the 20 in a bull run, you do tend to test the 50 with a close. It happened on all these occasions except this one, and even on this one, we did have further downside after that initial day that was red. So that is something to look for. There is a high likelihood that we will have a close in the coming days closer to the 50. Now, I'd like to draw your attention to this section here, because you'll notice we closed below the 20, and then we tested the 50, but then we closed below the 50. So what happened next? Well, we tested the 100. So this purple line is the 100-day moving average. So that is where the crash occurred too. So if we close below the 50, then the next thing to look for is closing somewhere and testing the 100-day moving average, which at the moment is at about $40,000, okay? So the 50 moving average is about 45,000. So if we close below 45,000, I would expect that we're probably going to drop another 5K and test the 100-day moving average as well. So the two particular scenarios that could play out at the moment are that we test the 50 and bounce off it like we did in these occasions when we're going up in a bull run, or we crash through the 50 like we did at this point. So those are the two scenarios. But either way, I think it is very highly likely that we are going to touch and close around the 50-day moving average, around 45K. And from that point, if we bounce off it and make a higher high compared to this, then the bull run is potentially back on. If we make a lower high, it'll end up looking something like, this kind of scenario. We make a lower high, and then you could probably expect further downside. So that's something to keep an eye on as well. The other scenario is that this is a dead cat bounce and we end up going down here. And if that's the case, what levels should we be looking for the next potential bottom of Bitcoin? So to answer that question, I've got another chart here, which is still a daily Bitcoin chart, exactly like what we're looking at. However, what I've put into this chart is the descending line here that we followed between May and July. This is something to keep a close eye on. I've also put in levels of support over here. This is the 20K level here. This is the 24, 25K. This is around the 26.5K area. And I've also put in the 50-week moving average and the 100-week moving average, because we tend to test these moving averages one at a time. The 200-week moving average is down here somewhere at around about 15K. So I wouldn't even consider the 200-week moving average until we've at least tested the 100-week. So these are a couple things to look for. The other thing to look for is the time frame. So I've measured this rally that we've had. It took 47 days to go from the bottom to where we are now. So if we assume for 1 minute that that is the peak, again, it's possible we go up and it's not the peak, but let's just say for this particular scenario, it took 47 days to the peak. Then typically on the way down, it'll be less than 47 days. It could be half that time. It could be somewhere in the middle, like 25 days, 20 days, a couple of weeks' time. So I've just measured out 47 days as an absolute maximum. So that brings us to the 24th of October. So if we do find our way down, it's highly likely that well before the 24th of October, most likely, probably early October, we would find a bottom for Bitcoin. Now, in previous cycles, this 50-week moving average has been a really critical one, and I've shown this in previous videos, but I'll just bring it up one more time. So this is the 2013-2014 run. You can see we bounce off it, we go up in the dead cat bounce, and then we turn around and we crash through it again, and we end up making a lower low to where we bounced off it from. The same thing happened in 2017-2018. We bounced off the 50-week, we went up, we turned around, and we made a lower low compared to where we bounced off it in the first place. Now, in 2021, if we follow that same pattern that's happened on these two previous cycles at this very similar point, we bounce off the 50, we turn around, and we would find ourselves lower than the point where we bounced off it in the first place. Now, that particular point was about 30K. So if we follow a similar pattern to the previous cycles, if that there is the 50-week, we will go through it and we will go to a level lower than 30K. So if 30K is there, we'll find ourselves somewhere down in this region, somewhere lower than 30K. So the particular levels that I'm looking for here, we've got these levels of support, we've got this descending trend line, and we've also got this 100-week moving average. And you can see within this time frame here, they're all converging at this particular point. So Bitcoin at about 24, 25K, around about the start of October. And that is approximately, I believe that is, I'll just measure that out, to the start of October is about 23. So it's exactly half the time that it took to go up. So that is a very plausible place to be putting some cheeky bids on, as CoinsKid would say. So somewhere like that is a real possibility. It doesn't go in a straight line, of course. It would do something, something like that. And then from that point forward, we would probably see another dead cat bounce, and this time it would not be as high as the previous one. So it could be something like that. And then we'd end up making potentially a lower low somewhere towards the end of the year as a rough guess. But that's getting a little bit too far ahead of ourselves. And just to demonstrate this point one more time, this is the 50-week moving average, the blue line. And you can see every time we bounce off it, we go up and we go below and we never recover until we end up bottoming out at the bottom of the bear market. You can see that once we crash through it, we never recover. So in 2013, 2014, we've never recovered. In 2017, 2018, we went below it, we tested it, we couldn't get above it, and we bottomed out. Again, we had the COVID crash below it here too, and now we've bounced off it and we've gone up. If we do go below the 50-week moving average, it's highly likely that we don't recover until we end up bottoming out sometime in 2022. Now, that's not to say it's impossible, it's just that we haven't done it in the past. And finally, the last thing I'd like to show you is where we are in the current cycle according to this model that shows the 3 cycles as measured from the start of the macro market major correction dates, which I've got here. And you can see that 2017 and 2021 peaked at about the same time. 2013 peaked here. We had the 50-week moving average that went like that on it was there and also there at very similar points. We had a 50 to 65% increase here, here, and here. We turned around at this point on all 3 occasions, and we crashed through the 50-week moving average on those 2 occasions, and we'll have to see if we follow the same pattern again here. You can see there's a bounce, and there's another bounce there. So you can see there's smaller bounces, smaller dead cat bounces before we end up bottoming out towards the end of the cycle. So I hope you found that useful. There's a lot of water to go under the bridge, but we can find evidence in the previous cycles and including this current cycle to give us some idea about what happens next. We need to look at these moving averages, and just remember, when we close below one, we end up testing and closing at the next one below. That happens over and over again. And if we lose support at the next one, we tend to go to the one below that. So the ones I'm looking at for the 20, the 50, the 100 day, the 50 week, and also the 100 week. So those are the key moving averages I recommend keeping an eye on. So I hope you enjoyed that content. You can follow me on Technical Tim CR1 at Twitter. And until next time, I'm Tim, and cheers.